Okay, so I thought I'd do a quick video because it certainly looks pretty clear at this point that at least in the short term, interest rates have peaked and are headed lower, and that there's an economic reason behind it. So I thought we'd do a quick whip around on the various charts, take a look at interest rates, and then basically move on. That's about it. So let's take a look here. Starting with the LIBOR. What we're doing is basically going from the shortest term to the longer terms. And if you take a look at LIBOR, the Fed controls, we're still headed higher. And that seems to be in keeping, consistent with this little store over here, that the Fed is still backing a 75 basis point hike to battle inflation, so to speak. However, the markets are telling a much different story. So let's take a look. So the Fed is fighting the inflation battle, and the markets are kind of saying that the inflation issues aren't as big of a concern at this point. Let's take a look. You've got the 2-year treasuries that peaked back on June 13th. Okay, this timing is kind of important. Let's go to the 5-year. Inspect that. Peak here, June 14th. Go to the 10-year. You see the peak happening June 14th. And you can see on the 10-year what's interesting. First off, you go back to the 5-year, the 2-year, they're all declining in rates pretty precipitously. And it's really showing up in the 10-year treasuries. Going from 3.48% yield at the peak, and now we're sitting down at 2.89%. That's a pretty big drop in a short period of time. And it's consistent with the economic slowdown that's being shown, and we'll go here in just a moment, with the GDP Now forecast, which has really fallen off a cliff. It's concerning. So here we are. Looking at the 10-year on a short-term basis. This is an hourly chart over the last 3 months. And again, rates peaked on June 14th. And you can see they're really falling off a cliff right now. What is interesting is in the short term, we do seem to be a bit oversold. So there might be a little bit of relief rally. That looks like right in here. And that might have been just short covering positions, or covering positions, I should say, not short covering, going into the 4th of July weekend. But we'll see once things open up again on Tuesday. Now moving on, well, we might as well move to the 30-year and bring that chart up. But basically we just see the same thing. Where the 30-year peaked, looks like on June 16th. So moving along, we take a look at just a couple of additional charts, commodity-based charts, gold. And let's take a look at oil charts real quick, because I think oil tells a very interesting story. Because the oil chart itself is consistent with the slowdown that we're seeing in the interest rate charts. We peaked June 8th, had a secondary peak June 14th, and what's happened since? Oil's been pretty weak. I know everyone's upset about it, but I'm just saying, this is what the charts are telling us. There is something in the air as far as the economy is concerned. This is all consistent. And what's in the air with the economy? We go to the GDP Now chart, and sure enough, middle of June, we start falling off a cliff. Or we take a stumble, is a better way to put it. So we go from positive growth to zero growth in the middle of June, get a little bit of a relief rally. But now, the last several days, we've really fallen off a cliff. And we're now showing GDP estimates for Q2 coming in at negative 2.1%. That's alarming because last quarter was a negative 1.5%. If this whole, and the other part that's alarming is it doesn't appear to be any relief in sight. We haven't gone through the worst of things yet. I don't think that's the case. So, we'll take a look. Let's see if we can look up one more thing before I go. And I should have had this queued up, and I apologize I didn't. But let's just take a look at housing starts. I think it's worth looking at. Housing starts. Let's just look at single-family housing starts. And you take a look at it, and housing starts have fallen off a cliff. So you've got this concern in the real estate area. You have this concern with construction spending. And now you've got the markets confirming these concerns. And I think we're seeing, at least in the short term, a peak in rates.